Today I'm talking to Cathie Wood, the CEO of Ark Investment Management and active ETF superstar. You might know Cathie for predicting back in 2018 that Tesla would hit $4,000 a share.
Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'm reacting to some clips of Ark Invest Cathie Wood, a big favorite of mine and definitely of you guys as well. In this video, she shares some of her thoughts on Tesla, the future of the company, Elon Musk, and where she sees the next opportunity to see huge returns in the stock market similar to what Tesla produced for Ark in the last year. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
For the next 5 years, we believe that our returns will compound at an annual rate of something in the low 20% range. And this is in a market where traditional equity returns have been in the 7 to 8% range over time. So we still think there's a lot of room or runway ahead because what we think is not well understood is exponential growth.
A little understated there from Cathie Wood. She thinks most people don't understand exponential growth. I know most people don't understand exponential growth. I'll give you guys one of my favorite, very simple examples. If you take 30 linear steps, each 1 meter long, 1, 2, 3, you end up 30 meters away from your starting point. If you take 30 exponential steps, 1 meter, then double that to 2, then 4, then 8. I'm not even going to tell you the end number. I'll just tell you that you go far enough to walk around the earth numerous times. No one intuitively would have come to that conclusion, and that is the point. Unless you run the numbers, instead of following your intuition, your emotions, and your gut, but actually run the numbers, you will never have any concept of what exponential growth looks like. And that can lead to very poor investment decisions. When you're looking into companies that are going to experience exponential growth and you don't understand the implications of that insane rate of growth over time, this is how you can identify enormous opportunities that other people think sound ridiculous.
I think if we step back and look at Amazon in the early 2000s, I remember buying that stock and many people derided that decision because the thought process back then is in the tech and telecom bust, which is, you know, the internet is a figment of Wall Street's imagination. What makes you think Amazon's ever going to make any money? And if you did at that time assume that Amazon's revenue growth would compound at a 20 to 30% rate for the next 20 years, you would have bought that stock all day long, even if you were using a dividend discount model, right? I feel like our portfolios are filled with Amazons because the seeds for what we are doing now, they were planted in the tech and telecom bubble, and they have been gestating all this time, and now they're breaking out to those growth trends, just like Amazon did.
Just a quick story on Amazon. My father is a total nerd. Clearly that runs in the family. And in 1993, he hooked up internet access to our home via a link to his computer, which was one of the first employers in the country to have internet available, period. And soon after discovered Amazon. Maybe a few years later, 96, 97, somewhere around that. Discovered that it was far cheaper to import stuff pseudo-legally into Australia than buying locally. And as a family, we began making purchases on Amazon. Since then, I was keeping an eye on the company both as a customer and just out of interest, watching this insane rate of growth. This was still early days, but I didn't have my investing hat on then. I was a kid, I was a teenager, you know, whatever. I used the product, I used the service. I never thought about investing in the stock. But years later, when I'd finished investing in real estate, and by finished I mean I couldn't get any more loans from the banks because I had a few $1 million worth of debt and they weren't giving me any more money, I decided to begin investing in stocks, and Amazon was one of the first stocks that I purchased after loading up initially on Tesla because I'd seen that growth over a period of 2 decades and thought, you know what, they've laid an amazing foundation. I can see Amazon Web Services really playing a huge part in the future. I'm in. And today, the only stocks that I own in my portfolio are stocks that I own because I saw potential for exponential growth in their future, declining costs, as well as standing on the shoulders of giants and some of the preceding technology that have enabled these companies to continue to grow and dominate.
So the portfolio may not be able to replicate the 500+% gain it's had in the past 5 years, but it should be, based on what you just told me, well over 100%. It should double plus in the next 5 years.
Yes, we expect more than a doubling in our portfolios over the next 5 years.
If I look backward, as you well know, Tesla accounts for almost a fifth of the return that you have generated in that 5-year time span. Which of your current holdings, Cathie, do you think will supply the biggest lift in the next 5 years?
Tesla's still in the running, but I would have to say the biggest upside surprises are going to come from the genomics space.
Well, I guess it's time to fess up, guys. I recently started a position in ARKG, the Ark Genomics fund. I'm kind of using this as a store of wealth. I think there's enormous long-term potential. We could see a 10x or more over the next 5 years. But I'm not somebody to try and pick winners or losers in the genomics space. I've been super interested in this stuff for years. As I mentioned, I'm a total nerd. I've read a dozen or so books just on the genome alone. I've had my own DNA genotype probably 7-8 years ago, somewhere around there as well. Totally obsessed, and I know there's huge potential in the future. What I'm doing with some of my capital now is actually using ARKG as a store of capital, like a superior version of gold in my opinion. Now, I may hold on to this position indefinitely, but the more likely event is over time when there's opportunities, I'll probably sell out of pieces of ARKG and use that to take advantage of those opportunities in the market.
And that's because the convergence of DNA sequencing, artificial intelligence, and gene therapies, importantly CRISPR gene editing, are going to cure disease. That convergence is going to cure disease. Now we have real science and technology surfacing the mutations in our genomic profile. And as they surface those mutations, what do we see? We see the earliest manifestations of disease. And now, with the combination of artificial intelligence and gene editing, we're able to both anticipate diseases and cure them potentially. Beta thalassemia, we're seeing it, sickle cell disease. We even think it will work in diabetes, which is where most if you look at the largest category of spending year to year in healthcare, it's diabetes.
Cathie, in August of 2018, you tweeted a letter to Elon Musk in which you effectively put a price target on Tesla of $4,000.
Now, just for those keeping score, that was a 2018 5-year price target. So 2023 price target of $4,000 per share for Tesla stock before the split. Let's see where we're at now as of the Friday closing price as Tesla was added to the S&P 500 index. So Tesla stock closed Friday at $695 on the back of a huge tsunami of buying in the last fraction of a second for S&P 500 inclusion. The stock split 5-for-1 since Cathie Wood had this $4,000 price target. So where would the stock be? Wow, look at that. Spitting distance from the $4,000 price target for 2023. Cathie sounded insane at the time. Now who's laughing?
And that call arguably made you famous, but it also exposed you to a world of hate on Twitter. Any regrets?
Oh, no, not at all. I didn't read the Twitter world of hate notes to me. Our marketing department used to send me anything that I needed to respond to. But no, we were standing up for what we thought was right. And we also were astonished that at the backlash. And I think part of it was Elon's personality and the way and the things he was saying on Twitter. He's a provocative soul, and he's brilliant. He's our Renaissance man, and all we did, which is what we should have done in terms of our research, is keep our eye on the prize, and the prize had to do with the autonomous taxi network that we believe Tesla will be in the pole position to dominate, mostly because of its advantages in artificial intelligence and the amount of data it has collected and the AI expertise that it has. And we couldn't believe that no one wanted to listen to this.
Keeping your eye on the prize is always important, especially when it comes to Tesla. And it's true, the amount of FUD that was centered not around Tesla the company, but around Elon Musk the personality was just astonishing. And it was suppressing the stock price, scaring people away from the stock, making people believe they were doomed. Why? Because Elon did this, Elon said this, Elon is different, Elon, rather than Tesla. Now sure, there was some Tesla related FUD as well, I acknowledge this, but there was a ton of stuff specifically relating to Elon. Not his competence, not his ability to lead this company, but things that were completely unrelated to Tesla and Elon's leadership of said company.
They really just made fun of it. And it made me feel even more strongly about Tesla, because what we saw happen over time as the naysayers were growing was their barriers to entry, or Tesla's barriers to entry, were increasing. Their battery technology was already 3 years. Now it's maybe 4 years ahead of the competition, especially now that they're going to build the battery into the structure of the car. They had the first AI chip. No other auto manufacturer has an artificial intelligence chip for autonomous. They now have 15 billion miles of real world driving collected. Google, the next closest, has about 25 million, 15 billion. The winner in autonomous is going to have the most data and the highest quality data. That company right now is Tesla.
It's actually quite impressive how many people are willing to ignore this fundamental fact. The company who has the most data, quality, real world data, will win full self-driving. And as we just heard, Tesla's lead is, how would we say, astronomical. The truth is, I think 99.999% of the people who question this outcome, data equals the winner, don't understand deep learning and neural networks. Facts.
So way back then, our confidence was high that they were heading in the right direction. And as the naysayers grew, it was after 2018, through into 2019, as the stock was cratering, as many out there were saying Tesla was going to run out of money. We thought that was a ridiculous concept. The only time a company like Tesla will run out of money is if the market shut down. There were companies that ran out of money in 0809 because the markets were closed. The markets were open. We were going to support Tesla if they did an offering. So were many others. So, I mean, they were creating stories that were just ridiculous on the face of them. So, no regrets whatsoever.
Let me know in the comments below if you were one of the people seeing the FUD at the time and thinking, what are these idiots talking about? How can anyone believe this crap? If I'm being honest, I think a lot of the FUD that I was seeing at the time relating to Tesla wasn't provided by well-meaning but completely fucking moronic analysts, but people with ulterior motives. Now, of course, I don't have any evidence of this whatsoever, but I do get the feeling, I know, very scientific, that a lot of the FUD wasn't being generated by people who actually believed what they were saying, but they were trying to do damage to the reputation of Tesla and harm to the price of the stock. Just saying. So I hope you guys have found this video insightful. Please leave a round of applause for Cathie below in the comments. She's an absolute badass and finally is starting to get the recognition that she deserves. Ark Invest are slaying it. Cathie is on top of the world and I'm really glad to see it. It's about fucking time. I'm Stephen Mark Ryan. This is Solving the Money Problem and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.